Good afternoon, viewers. My name is Imran. I'm a UK and international tax specialist. Once again, I'm here with another interesting video. In this video, I will explain to you how you can calculate marginal relief for corporation tax purpose in the UK since the corporate tax rate has been changed from 1st of April 2023. So you will come across with this, and this will be highly tested in your exam and in practice. I would advise you do not skip any part of this video because there are lots of useful information. There are various important tricks which would help you, and you will definitely do well in your exam and in practice. Also subscribe to my channel because I'll be making more interesting video which will cover UK taxes, financial reporting, financial management, and performance management. Now, this topic is relatively new, so this will be definitely tested in your ACCA, ACA, or CTA taxation exam. It's also helping viewers to understanding the marginal relief calculation after 31st March 2023 in the UK since the CT rate increased to 25%. So this video is with illustration which will make it very easy for the viewers to understand the concept. Those who studying UK taxes, corporation tax from 1st of April 2015 to 31st March 2023, a single rate of corporation tax applied to all companies in the UK, which was 19%. The corporation tax rate has been increased to 25% since 1st of April 2023 for a company with income in excess of 250,000 in the accounting period. If a company made a profit of 50,000 or less, they will pay the small rate or small profit rate, which is 19%, or they will pay tax at 19%. However, they may be entitled to a marginal relief if their profit were between 50,000 to 250,000. So that is the most important parts. You need to pay attention. You need to be focused on this part because this part will be tested. The other part, yes, examiner can test you, but this will be the last line will be definitely tested because there are some calculation for you to be performed. Very important, the 50,000 and 250,000 profit thresholds are proportionately reduced for shorter accounting period and by the total number of associated company the company has. Also remember, it is possible that more than one rate applies in the accounting period. For example, if a business accounting period is from 1st of January 2023 and ending on 31st December 2023. Remember, till 31st March, the rate was 19%. So that any profit falling between that date from 1st of January till 31st of March, that profit will be subject to, doesn't matter how big is the profit because the rate of corporation tax was only 19%. And the rate for financial year starting from 1st of April to for the till 31st December for the remaining 9 months or 275 days was a different rate. So depend on the level of augmented profit. So I will show you on the following slide with illustration. If the company accounting period is shorter than 12 months, these limits are scaled down. So these limits are also scaled down by number of associated companies your company has or the company has. For example, if a company has 3 associated companies, so the limits are divided by 4. So the lower limit becomes 12,500. So it's mean 50,000 divided by 4. And the upper limit becomes 62,500. It's mean 250,000 divided by 4. Now, this formula will apply if the company has augmented profit between 50,000 and 250,000. Remember, what is augmented profit? If a company receives dividend, so the dividend is an exempt income or is not subject to corporation tax. So if you add this dividend to the total taxable profit, it will give you augmented profit. So it means is, so the F is the standard marginal rate relief fraction. So the formula is F multiplied by U minus A multiplied by N divided by A, where F is the standard marginal relief fraction, which is 3 divided by 200. So that is fixed. U is the upper limit, 250,000, which will be scaled down for a shorter accounting period, less than 12 months, and will be divided by number of associated company. A is the augmented profit. Augmented profit mean is the total taxable profit plus the dividend. N is the amount of total taxable profit. So then once we work out the marginal relief, so the total taxable profit multiplied by the main rate of the CT, so this will apply to a company if the profit or the augmented profit is between 50,000 and 250,000. So you will multiply this profit multiplied by 25% and then less the marginal relief. So to calculate the marginal relief, so I have given you the formula above. So this would give you corporation tax payable. However, I will show it to you with illustration to make your life easy. Now, here's an illustration for a company with accounting period ended 31st December 2024 with no associated company has the following results. So the accounting period began on the 1st of January 2024 and ended on 31st December 2024. So the company has a taxable total profit of 110,000, exempt distribution or the exempt dividend received by the company of 20,000. Calculate the corporate tax liability for accounting period ended 31st December 2024. So the hands are if augmented profit, here in our case, augmented profit is 110,000 plus the 20,000 dividend, fall between upper limit of 250,000 and the lower limit of 50,000. Then in this case, the marginal relief will apply. So the marginal relief formula is F multiplied by U minus A multiplied by N divided by A. On the following slide, I will show you how to calculate the marginal relief. Here, the accounting period began on 1st of January 2024 and ended on 31st December 2024. Assume it. Okay, it's not ended yet, but it's just an assumption. So there are two financial years, 2023 and 24, because in the UK, the financial year, even for the company, ending on 31st March each year. So in 2023, there's only 91 days. So from 1st of January till 31st March 2024, there are 91 days. And from 1st of April 2024 till 31st December 2024, there are 274 days. So remember, the lower limit is 50,000. So you need to spread the lower limit between two financial years. So based on the number of days, for example, for 2023, it will be 50,000 multiplied by 91 divided by 365. And for financial year 2024, it will be 50,000 multiplied by 274 divided by 365. And the same you follow for the upper limit, which is 250,000. Augmented profit, remember, the taxable profit is 110,000 plus the 20,000 dividend, so that give you augmented profit. So spread it over two financial year. Standard fraction is 3 divided by 200. So the taxable profit, remember, the dividend is not subject to corporation tax, is only added to find out augmented profit. So then the taxable profit you need to spread over two financial year. So then multiplied by the tax rate 25%. So the new tax rate, because of the augmented profit, is more than 50,000. So the tax rate would apply is 25%. Then you work out the marginal relief. So deduct the marginal relief. So the formula is F is the standard fraction, which is 3 divided by 200 multiplied by U. U is the upper limit minus A. A is augmented profit, N is the taxable profit, A is the augmented profit. That would give you a corporation tax payable. So how simple is that? And you would need that formula especially if when the financial year or the accounting period begins on 1st of January 2023, in exam you will be tested, and ending on 31st December 2023. There will be two financial years. So one financial year will be 2022, the other financial year will be 2023. Till 2022, so that was 31st March 2023, the corporation tax rate was 19%. So you will be definitely tested. So this is the layout you need to make your life very easy. And on the following slide, I will show it to you from the practical side, which I have taken from my own tax software to give you much better understanding how does this marginal relief work. However, this is the layout. If you follow this layout, definitely you can do very well. Now, here's a company where the accounting period began on 1st of January 2023 and ended on 31st December 2023. It's a very interesting example with a trading profit of 40,000 and they receive a dividend of 20,000. In the absence of dividend, the exempt ABGH distribution mean dividend. In the absence of dividend, then the company would be just subject to corporation tax of 19% because the taxable profit is less than 50,000. However, when you add the dividend, you will find out the augmented profit. So in this case, the augmented profit is 60,000. Now, this accounting period straddle over two financial year 2022 and financial year 2023. So 91 days fall in financial year 2022, and the remaining 274 days falls in financial year. So start from 1st of April till the end of December. That will be 274 days. So for the first 3 months, remember the corporation tax rate was only 19%. So you will make apportionment of the profit. So the apportionment of profit, so taxable profit is 40,000. Remember, the dividend is not subject to corporation tax, is only there to find out the augmented profit, which it will help you to establish whether you need to calculate marginal relief or not. Yes, you need to, because the augmented profit exceed 50,000 and is less than 250. So it's between 50,000 and 250,000. So in this case, you need to calculate marginal relief. So that 3 months, to take 3 months profit, and that would be from that 40,000. So it will be like 91 days, or you can simply do 3 divided by 12 times by 40,000. Still, examiner would give you marks. And that will be subject to corporation tax 19%, because till 31st March 2023, the corporation tax rate is 19%. And after that, it's changed to 25%. So for the remaining 9 months, so any profit you take, that will be subject to 25%. And then the marginal relief you will calculate for the remaining 9 months. So here is based on the real tax software. So that is the real tax software. So then marginal relief has been calculated, and you get the corporation tax net of the marginal relief. That's how it's worked in practice. However, for theoretical basis, you need to follow the method which I showed you on the previous slides. Now, the same example, it's the same from practical tax software. So like in practice, so you see there is a trading profit of 40,000. However, this time, assume that the company did not receive any dividends. So obviously, the trading profit, so that is also a taxable profit. So taxable profit is 40,000, and augmented profit is also 40,000, because there's no exempt dividend. The company did not receive any dividend. So in this case, as less than 50,000, so there will be one corporation tax rate applied for both financial year, so which will be 19%. So it's very simple, because now the augmented profit and the taxable profit is both 40,000, which is less than 50,000. So then the rate is still 19%. The trading profit is 51,000. The accounting period began on 1st of April 2023, which is exactly the beginning of financial year as well, and ended on 31st March 2024. So it does not straddle or 2 financial years. So it's cover only 1 financial year, which is 2023. The trading profit, which is also the taxable profit, 51,000. There's no dividend, so the taxable profit is 51,000, and the augmented profit is also 51,000, because there's no dividend. Here is, then you will apply corporation tax, because the augmented profit is between 50,000 and 250,000. So you will multiply this one. So first step you need to do is multiply 51,000 by 25%. Then you work out the marginal relief based on the formula which I give to you on the previous slide. So if you apply the formula here, you can work out exactly how, but that's how exactly it's look like in practice. Now, assume the same company with accounting period began 1st of April 2023 and ended on 31st March 2024. Now, here the trading profit, which is also the taxable profit of 250,000, the company has no dividend, so the taxable profit and the augmented profit is 250,000. Now, in this case, here is, because we're saying is you need to apply 25% rate, or it will be subject to corporation tax rate of 25%. Here, no marginal relief will be available. Marginal relief is only available when the augmented profit is between 50,000 and 250,000. Here, the augmented profit is 250,000. It's already touched this 250 upper limit. So here is one corporation tax rate would apply, which is 25%. No marginal relief will be available. Now, there is another example. So a trading profit of 45,000. So based on the trading profit, which is also taxable profit, there's no dividend, so it's also an augmented profit. So here the taxable profit is 45,000 and the augmented profit is 45,000. Now, based on the result, the corporation tax rate which should apply is 19%. However, because if you look at the line number 3, so number of associated company is 2. So in this case, if you have visit my previous slides, which will tell you that you need to reduce the lower limit by number of associated company and the company itself, which will be divided by 3. So in this case, again, you need to apply 25% rate, not 19%. So you will apply 25% rate because if you consider the number of associated company and the company itself, so there are 3 companies. So you need to divide this 50,000 limit by 3. So this would reduce the limit for tax purpose. So in this case, again, so corporation tax rate would apply, which will be 25%. And then the marginal relief will be available based on the formula you need to use. So you need to be vigilant. You need to see if the accounting period is shorter than 12 months or there are associated companies. So you need to look at every single factor, because that's why I want to give you all the example. Make sure you understand this concept. Now, here is a trading profit of 130,000, which is also a taxable profit because there is no other income. There is no dividend, hence this is also an augmented profit. So an augmented profit is 130,000 based on augmented profit, which is between 50,000 and 250,000. So if you look at this one, so there should be a marginal relief should be available for this company. No, because look at the base on number of associated companies. So the upper limit will be reduced by or divided by 3. So this will reduce the upper limit. So when you look at this one, so 250,000 divided by 3, so obviously the result will be lower than 130,000. In this case, simply you multiply this 130,000 by 25% without giving any marginal relief, because if there will be no associated companies, in this case you will calculate 130,000 multiplied by 25% and then using the formula and work out the marginal relief and then deduct the marginal relief. However, because there are 3 companies in total, the 2 associated company and the company itself, so the upper limit will be divided by 3. So this will be definitely lower than 130,000. So in this case, there's no marginal relief available. Finally, thanks for watching. I hope you found this video useful. Remember, once you have the knowledges, the examiner cannot trick you. Because your knowledge will be tested. The examiner wish to test your knowledge. Even in practice, everyone wish to test your knowledge. Being a chartered accountant or a chartered tax advisor, people have hope that you have the knowledge, so they will test your knowledge. So my aim is to give you confidence and knowledges you need for your exam and in practice. Hence, your chances of employability or passing your exam will be high. Do not forget to share, like, and comments, and also hit subscribe button, because I'll be making more useful videos like this to benefit you. I have also uploaded videos which cover corporation tax, employment taxes. I will be making video on partnership, CGT, capital gain taxes, and inheritance taxes, financial reporting, and financial management. Now it's time to wish you a very good evening.